This class is designed to help you understand the home buying process. We all have our whys on why we're here. Maybe we're here having purchased a house because of our credit. Maybe our finances isn't straight. Or maybe we're just tired of paying rent. Rent is getting higher, don't we all agree? So definitely there's a reason why we're sitting here today. Or just maybe we don't want to walk into this situation blindly. For buying a home is a difficult process. So you want to know exactly what you're getting yourself into. I do have my notes here. I want to stay on track. We have other speakers speaking as well, and I don't want to step on their foot because I will get into a little deep. I just keep talking, so I want to stay focused. So I do have everything written out for us. How many of you guys are looking to become a homeowner by the end of this year? Show of hands. Okay, great. Well, you're actually making your first step by being here, so congratulations to you. Educating yourself is very important in this situation. Again, you want to know exactly what you're getting yourself into. We're going to have 3 speakers today. One of them will be myself. My name is Daniella. I'm a realtor at Premium Property. I'm going to be going over the process of becoming a home buyer. We have Caroline Cotto. She's a broker's associate at Premium Properties as well. She will be going into more details for you on becoming a homeowner. We have Thomas. Thomas is a senior loan officer at Lux Mortgage. He will be going over details in regards to loans, credit, also different programs and more. And he also has his part named Alex. He's from Lux Mortgage as well that will be speaking to you also. So let's get started. If you guys look in the back, we have sign-in sheets. I want to be able to get your information so we can keep in touch just in case you have any questions. Also, there's folders available. It's going to have great information on the home buying process. Feel free to call, text, share my information. My contact information will be located at the bottom of that packet as well. Please save all questions to the end. We have a time designated for questions alone. So in that packet, if you look on the back, the sheets are blank. Feel free to jot down some notes because you're going to have a lot of information to take with you on your home buying journey. All right, so in the beginning stage of processing a home, it's very important to set goals. You want to be able to write them down, speak them into existence. Be saying in your head, I will become a homeowner by the end of this year. I will do X, Y, and Z to improve my credit. Also, I will put aside some money each month in order to have some money left over for my home buying expenses. You want to be able to write it down. Also, go back to it. Don't just write it down, put it away at home. Actually go back to it and look at these often. Be able to look at these, cross them out, because what you're doing right there is setting yourself up for success. So setting goals is very important for you want to have a plan. Give me 1 second. Also, quick question. What do you guys think is the first thing you want to do when going shopping for a home? Show of hands. What do you guys think is the first thing you want to do? Okay, go ahead. Get pre-approved. That's a good one. Anybody else? There's no wrong answer. Huh? Know exactly what area you want to move to. Anybody else? Okay, now getting pre-approved is very important because that definitely lets you know if you can even get a loan. You want to know if you can get a loan, how much you can get. But most importantly, you want to be able to find yourself a good realtor. I do hear people say, I don't need a realtor. I want to do this on my own. I'm trying to save some money. But just so you know, by not having a realtor, you're saving yourself nothing. Zero. You're not saving anything at all. For example, when you normally go shopping for a home, how do you guys normally shop? When you're looking for a home, what are you guys doing to see homes? Questions? Answers? How are you guys looking? Are you guys going on the internet? Okay, do you guys do drive-bys? Okay, you looking in through papers? Magazines? Online. Driving by. Definitely. Now, for example, when you're doing drive-bys, you're driving by, you see this nice house, and you're like, oh my gosh, I want to get inside this house and know what's going on. When you do see the sign, you see a listing agent and a contact number. So once you see that listing agent, you reach out to that listing agent. That listing agent has already been hired by somebody. Who do you think that person is working for? The owner, the seller, of course. So you're reaching out to them. You know they're working for the owner. The owner is asking for that listing agent to give them the best price possible. Do you think that's a high price or a low price? A high price. They want the most for their bang. Okay, so as an agent, you're looking for your agent to actually give you the best price possible. Do you think that's a high price or a low price? Do you want them to get you a high price home or a low price? Exactly. So you want to pay the less amount for the best home, of course. So at the same time, if you be reasonable, do you think that one agent that's actually working for the seller and their job is to negotiate the best possible price, which is the highest, do you think that same agent is going to work on your behalf when they're trying to get the highest as well as get the lowest for you? Exactly. Welcome, welcome. So you're definitely going to need a realtor on your side. Now, as far as how the realtor gets paid, the best thing about it is that by hiring a realtor, you don't pay them nothing. Their job is to find you a home, help you move in, and they don't get paid until you buy. So, for example, what's your name? Danielle. So you, Danielle, you're the seller. You asked me to list your home, and I'll be the agent that lists your home. Me and you negotiate a payment. Say, for example, we negotiate that you're going to pay 6% for a buyer coming to buy this home. So in that case, we negotiate a price, and then, sorry, I lost track. So we negotiate a price, and then you, the buyer, we'll say Belinda, you bring an agent with you, a realtor, to come to the home saying that, hey, I want to purchase this home. I have a realtor. That 6%, when a buyer brings a realtor, is split among us. So it's not like you're paying. That 6% is going to be split amongst the listing agent as well as the realtor. Now, if you, the buyer, Belinda, comes to me alone without a realtor, I keep that whole 6%. So regardless, you're not doing yourself any justice for regardless, either I'm going to get the 6% that the seller's paying me, or I'm going to split it with a realtor that's designed to be on your team. So it's best to have a realtor and not to walk into the situation by yourself. Also, what do you think is the next most important thing to do in this process? Yes. Budget, that's a good thing to do, but that's a good thing to start doing before thinking about getting a home. You know what I mean? But then again, at the same time, you're going to have a lender that's going to help guide and assist you with that as well, too. But Danielle also saying getting pre-qualified. Getting pre-qualified is very important. Do anyone knows the benefits of being pre-qualified? Okay. You'll know the areas that you have to work on, and it's okay not knowing. This is why we're here. This is why we're here, to actually educate ourselves. So when we do walk in, we'll walk in knowing something. Okay. So what she said, knowing the areas, but getting pre-qualified. It allows realtors and sellers to take you more serious, because then you'd be like, hey, I do want to search for homes. A lot of them ask, have you been pre-qualified? Some homes won't even let you view the homes without having a pre-qualification letter. So it also, most importantly, allows you to not search for homes that you can't get. You know what I mean? That is very heartbreaking. You're going searching. You're asking your realtor, hey, send me this X, Y, and Z amount of homes at this price. And then you actually find out that, hey, according to your pockets, this is what you can only afford. So it's very heartbreaking putting and investing so much time into a home that you're not sure if you can even get into. So getting pre-qualified is definitely important. 1 second. I'm doing these without words, but I mean without reading, but I do want to stay on track. So forgive me for that, guys. So once you get pre-qualified, the next step is to start going to look for your home. At this point, you should already have an idea, hey, I want to live in this area, how many bedrooms I'm looking for. You're already pre-qualified, so you know exactly how much you could definitely afford. So you send your information. This is when you're putting your realtor to work. You let the realtor know this is what I'm looking for. Please send me a list. And this is definitely going to save you some gas and time for you're not doing any drive-buying, going on the internet hoping that this home is still available, or looking through the paper. The realtor will have the updated list for you. Now, of course, you're not going to find this home, maybe not the first round. If you do, that's awesome. But then, until you find exactly what you're looking for, that realtor is going to do their job and keep you updated each week, month, daily, however you would like. So knowing exactly what you're looking for and then actually getting the realtor to start working for you is going to be a good key to success, because this is going to allow you the ability to have everything updated. So whenever you receive something you like, you could start moving into action right then. Right, so once you find the home, you loved it, you sent the home info to your lender, he calculated the numbers for you to make sure finances is straight, everything looks and feels right, so now it's time for you to put into an offer. An offer is when you put in writing the amount you want to buy the home for, and it will include any additional expectation connected with your offer. So before making an offer, please be prepared to put down an escrow deposit. It doesn't matter if you're getting down payment assistance. An escrow deposit is like good faith, letting the seller know that you're actually serious about purchasing this home. So with the escrow deposit, it's not any additional money. For example, when you go to rent a home and you put in an application, your application gets approved, they're going to expect for you to put down a deposit within the next 48 business hours. Agree? And this right here allows the owners to know that this person is actually serious and they're looking forward to moving into the home, so we're going to take this home off the market until everything is finalized. Just like the home buying process, they're going to require for you to put down a deposit within the first 3 days after your offer has been accepted. And 48 hours. So the next 3 days, they're going to ask for you to put down a deposit. The minimum I've seen has been the minimum $500, but I've seen the most thousands. But this is what you can decide on what you're going to put down, and it allows the owner and the seller to know that you're actually serious. So an escrow deposit would be mandatory. Now, once you put down an escrow, offer has been accepted, at this point, you are now in contract. You and the lender will be working towards securing the mortgage. You have a contract in place, so it's easier to put numbers together for you than to not have a contract, and then it makes things a little bit more difficult. They just sit there and give you some estimates at that point. So this is where the details will be finalized. Your lender is going to ask for your W-2s, work information, all the financial pieces to your world. The mortgage company is going to want to see it. It's best to provide this information to the lender for some time. Receiving or providing the information to them could be time-consuming, and being in a contract is time-sensitive. So providing this information at the beginning is most helpful. So all the numbers will be figured out between you and the lender until the mortgage is secure for closing. Also, during this time at the beginning of the contract, it's highly recommended to do an inspection. Inspection of the home is when a certified inspector examines your home and describes all structural concern that they notice. So you made an offer on the home and you feel as though the house is a solid place to live in. You know, everything looks beautiful on the outside and stuff like that. The seller may note that the roof may have some problems, or your realtor might even notice some things that they might discuss with you as well. But often with inspections, it would find other types of issues. Maybe there's termites in the homes, or maybe there's a leak that you might not see through all the prettiness. This inspection will be able to provide that report for you. So please, we do recommend that you do inspections, because often during the inspection times, additional negotiations are able to be made. Maybe you could ask for credits, maybe you could ask for repairs if it's majors. This is where you could really negotiate the sales price. Next step after the inspection is to do an appraisal. Normally, the appraisal is ordered by your lender, but your lender is deciding your loan amount as a percentage of the property price. They would either choose the sell price or the appraised value, whichever is less. The appraisal is required. Normally, like I said, ordered by the lender, so the appraisal value is important when it comes to how much money you can borrow. After appraisal, you want to get the owner's insurance, the homeowner's insurance. Normally, you can do it with your car insurance, get the bundle up plan as well too. The lender would need this to figure out your monthly payments. The insurance protects your homes. It not only protects your financial interest in the home, it also protects the mortgage company's financial interest as well. The most basic part of insurance is ensuring the structure itself. So, for example, if the home was burned down, taken by a tornado or any sudden incident, that investment you and your mortgage company has made is no longer existing. So what the insurance company will do, they will rebuild and bring that investment for you and your mortgage company. So the lender will assist you with the insurance before the closing, insist that you have the insurance before the closing. You simply reach out to your local representative, your agent, saying that, hey, I'm purchasing a house, this is my closing date, let me know if there's any information that you need from us. From there, they're going to provide you with a quote. Now, with this quote, you hand it over to the lender, and then from there, he'll be able to factor it into your payments as well, too. So they're definitely going to require that you do secure this insurance before closing as well. All right, so again, before closing, as I mentioned, and do the insurance, they will provide you with a certificate. You will forward it to the lender so that the closing can happen. Last and final step is the closing. Once everything is in place, a date of sale will be set for you. At this time, all documents will be signed. Ownership from the home will officially hand over from the owner's hand to yours as well. So that's like a basic summary of the home buying process. We're going to have Caroline Cotto, the broker's associates, to take over to go into more details for you. Can we get a hand clap? I know I did a little bit of everybody's job, but you got this.
Good job. Thank you, Daniella. Thank you. Hi. She did awesome, right? Yeah? You guys understood most of what she was explaining there? Yeah? The urgency of some of the things that we need done in advance of the home buying process, the knowledge that you guys need to have. I know it's kind of a skip around. I'm actually going to refer it to the lender because I know she kind of detailed a lot already, and I want to be able to jump back in. But some of the things that she was talking about that I want to focus on just a hair more is the knowledge of how much financing you're going to need versus how much you're going to need in advance. And a lot of the times people don't remember that they're going to need these things in advance. So things like her escrow monies, your inspection money, your appraisal money, these are all things that are paid up front before you even close. So it's very important that you know that within a certain time frame, usually between like 3 to 7 days, a lot of money is coming out of your pocket as soon as an offer is accepted. So a lot of that is something that you need to realize in advance. Say, okay, I can go ahead and buy this house. Yes, you can, but are you prepared financially up front, or are you still needing to wait that 30, 40 days to get your finances together? Tax time's coming around the corner, so I know everybody's getting ready because that's always going to be a nice little income coming your way, and you can use that moving forward. So just remember, don't go on a shopping spree prior to that. This is going to be one of those other things that we talk about. Everybody's excited during the home buying process. They want to get their furniture. They want to get all their new fixtures and things that they want for their home. Don't. Not until after that home is closed. Because a lot of the times, things reflect on your credit, things will change, your debt to income ratios change, and it changes everything for you, which is why, like I said, I want to refer it over to the lenders up front, and then I'll be able to come back and answer any questions that you guys have in great detail about any of the process so that they can go over a lot of what they require as far as documents for you guys and levels of debt to income ratios that you can qualify for, the different kinds of programs that are out there for you. We do have in your package some programs that are county-based programs for down payment assistance, but a lot of the lenders have their own specific programs to work with. And so that's why you want to talk to your lenders, really get to know them, and build your team. Like she said, your team is your agent and your lender. We are here to protect your interests the entire way. And that's what we're here to do. Our goal is to see you get those keys across that table. Okay? So we're going to have Tom come up here. I almost called you Tom. Is that okay? Can I shorten your name? I just did that anyways.
What's that?
I called you Tom.
My friends call me.
I'm going to okay, good. Just checking.
Do you guys, is it okay if I don't use the mic?
Yes.
All right.
I didn't know if it was on
I'm
the
more of a
record.
hands talker.
I am
so
too.
If I have this mic, it's going to be a lot of wind blowing.
In and out.
Yeah. So I'm Tom Flood, Lux Mortgage. This is Alex De La Campa. He works with us as well. I have two offices locally, one in Maitland, another downtown Orlando. We're a locally based boutique brokerage. I've been lending 19 years. I know the community very well. So we don't do any marketing. So you may say, who's Lux Mortgage? Truth of it is, we do a ton of volume, but it's all on referral. So I say that to you because we truly care about each and every one of you with your situation that you may have, and there's not two of you sitting here who has an identical situation. So you may sit there and go, oh my gosh, can I get this, can I get this, can I get this? We've seen thousands of different loan scenarios, and we'll figure it out. The reason why I say as a broker and I did not convert over to a lender is I like to have that flexibility to have different lenders I can work with. You don't want to walk into your big box bank and you go, okay, well, they're telling you you don't qualify because you have to fit into their guidelines.
Can you put your back there? Yeah. You guys can hear? Sorry, this thing just came on. So I was like,
Oh, you're fine. Oh, if you can't hear me, just say it. No problem. I can talk louder. So when you come to us, we're able to look at your situation and go, okay, this is who we are. This is where we are. And let's figure it out, and I'll have you invest in who can help you. So you don't have to get all this extra anxiety going, oh my gosh, oh my gosh, oh my gosh, my credit's not strong enough, I don't have enough assets and reserves. A lot of the guidelines are sometimes overlays, where it's to help protect the big box banks from their risk. So we don't deal with all that, so it makes it a little bit easier as we go. Let me start by asking, have any of you ever applied for a mortgage in the past? You have? Okay, and what was your experience like?
I actually closed my home last year in June.
Oh, you did? Congrats! So may I ask you what brings you back here today?
Well, for one, to support my friend Daniella.
Oh, very
And,
cool.
never have too much knowledge and get her tax return. So
Right.
eventually this is going to be like the first and last one we'll ever live in. So, if I miss something in the process, I can
Sure.
get it and say, okay, maybe for next time. So you just never have to.
Okay. Yeah, I think that's awesome. I mean, right, they say knowledge is power, and it truly is. I mean, the more you know, the better you are, right? Helps you prepare for the future. So, just a simple question, like, does anybody here know what goes into getting a mortgage? What are the requirements? What are the basics? Income, credit, assets. There's one more that we kind of put. It's debt ratio. So we do go down to a credit score as low as 580, and that is for an FHA loan program. And the requirement on that is 3.5% down. All right. So the first thing you always want to ask yourself is, okay, am I saving money? Do we have a budget? How many of you here actually have a budget that you worked up at home? You have a budget? Okay. Do you guys follow your budget? You do? Okay. Perfect. You do follow yours?
Not all the time, no.
it's hard.
Not all the time.
No.
It's hard, and honestly, guys, I'm more than happy. I can email all of you cash flow analysis, and I use it myself. And what is that for? You'd be amazed. I mean, those of you who do your budget. Oh, I need to use the mic.
Oh, I hit the button, so you gotta hit the power button. So sorry.
My apologies.
We were recording, that's why I thought it was.
So you'd be amazed as you start running your budget. Wow, I'm spending a ton of money. Yes. Debt to income ratio. So debt to income ratio, what that means is you add up all your credit, your minimum payments, your car payments, student loans, credit cards, and then what our proposed mortgage payment will be. So once you add all that together, we divide that by your gross income. before taxes are deducted. And then there are different ratios, and we'll get to that. I don't want to make it too confusing right now, but you'd be amazed as you start running down your budget where you spend money and how much money is going, to places that you don't even realize. I know for me, I'm a P&L guy. I do my numbers weekly, and it stresses me out. I'm like, wow, I could be cutting back here. I could be cutting back there. My wife has a little bit of a spending problem, but we won't get into that right now. So that's kind of the basics. We will be able to coach you guys through the process, whether it's 2 weeks from now or 2 years from now. We're not going anywhere, and we are here to help and provide the knowledge in order to help make a good decision. So I take it everybody except, and I'm sorry, what was your name? No, behind you. Madeline? Magna? So is everybody besides Magna renting right now? Okay. And do you mind if I ask you how much you're paying in rent right now?
It's actually going up compared to February.
It's
1108. Okay. So do you know how much house you could be purchasing for $1,100 a month payment?
Not exactly, but
So you'd probably be looking at a $175,000 home, right? So it's like when you start doing the math and you start looking at different sides of the value of owning a home. If the market's going up at a 3.5% rate, which is historically over the last 30 years, start doing that as you're paying the same monthly payment you're paying in rent. Now you're paying 22% of that $1,100 goes towards your principal, so you're gaining value there as the equity continues to increase. And you turn around in 5-10 years and you have a little bit of a nest egg there. It allows you to make some better decisions moving forward, maybe get out of debt, whatever that situation looks like. So at this point, I would say once you figure out your budget and you know where you're at, it's definitely a different thing where you have to be able to grow some assets and start to save. When it comes to saving, there are down payment assistance programs. And does anybody here know how much those down payment assistance programs require at closing? Besides you.
I use down payment system.
Okay, how much did you have to put down?
Well, I went to City of Orlando.
Yep.
The City of Orlando, they only required $1,000. They only required $1,000 as your contribution, like your contribution towards the the things that you have to do before you close. They only required $1,000.
Right. Okay. And they do range from $1,000 to $1,750. And there are many different programs. And some, they're all great programs. Let me just say that. They're all great programs. Some of the challenges we may run into is funding may go dry at times. So there are times where we may be ready to close, and that program may be waiting on funding. So those are some of the other side of it. Not to say that we can't work through that. However, those are some of the challenges that may come about. I don't know if you guys grabbed the extra flyer that was next to the folders back there, but we do offer a different type of down payment assistance, but it's a grant. So when you do a down payment assistance program, how long does the city of Orlando require you to live in the house?
10 years.
Okay, so what that means is, it's Magna, right?
Yeah.
Okay, so if Magna was to sell her home within the next 10 years, you would have to pay back how much assistance you received. Correct. So yes, they're trying to build up owner-occupied properties within the community. They don't want to see investors coming in. They're, whatever the city can do to encourage you to purchase is what they're trying to do. However, if you sell, you have to then pay back that money, which, hey, it is what it is, right? I mean, it's free money.
Right.
So the different program that we offer that you may have grabbed the flyer for, we would give you a 2% grant. So you would have to come up with 1.5%. So if you're looking at a $200,000 home, we're looking at $3,000. So it's a little bit more. However, there's no questions if we're going to have the funding and some of the other emotional stuff that could play a part. But neither here nor there. We could always visit that as we go a little further down the road.
these are the things that is gonna happen before you even much get it. Real stories?
Correct.
That's my,
It would be required. It would be required at closing. At closing. So, um, speaking of the money needed before, and Daniella touched on it. Really, the only thing you're going to need is just for the appraisal fee, which is $485, and then, not to get into the real estate side, but if you're buying a home, definitely get a home inspection, right? We could all walk through a home and go, oh, it looks pretty good, but we don't know. What do we know?
Just the estimate that runs about what?
On a home inspection, probably it's like $350. Yeah. Yeah, I mean, I shouldn't even answer that. You guys know better than me.
Yeah, it can go anywhere from about 300 to 500. Yeah. Exactly. Yeah.
What's that?
I said roughly about $1,000, like to be this
Yes,
round.
correct.
Just those two, essentially, like the appraisal and the inspection. Yeah. Well, and your escrow. You gotta remember your escrow, your down payment to say, hey, I'm interested.
The actual is what you decide?
Yes.
But is it something that we have a talk to them and
Yeah. Yeah.
One of the biggest issue that I've been, asked some questions, is there any, grant funding for individuals with no kids?
Grant funding for individuals with no kids.
Yeah.
Are you a first-time home buyer?
Yeah,
Then there's grant funding for you.
okay.
Yeah, I don't think it has anything to do with having kids or not. So on the flyer there, you mind if I see the flyer real quick? So basically, here's how you qualify for the grant. You ready? You either have to have that's okay. You either have to have income no greater than 140% of our median income. Well, for the county, let's just say ballpark, it's like 58,000. So let's say 60,000. Okay. Or you have to be a first-time home buyer or a volunteer. So if you've ever volunteered at the church, you qualify.
Awesome.
Oh, amen. We need all volunteers. So, and look, if you're a first responder, it's really, when you read over here, eligible borrowers, it's pretty wide open. The whole kids thing, I like where you're going with it, but no.
I just asking because I know this is new, but before, doing research and asking, oh, no, you have no kids. You can't help. Oh, no, you have no kids. You can't help.
So the reason why they're saying that, if I'm understanding it correctly, so a lot of the down payment assistance programs, they're based on household income. So they're going to say if you are a single household, you can only make up to X amount of dollars. Let's just say it's, I don't know what I'm talking about. Let's just say it's $28,000. Then if you make more, you don't qualify. So that's why they're saying, hey, you need a household of kids. But we all know they're a lot more expensive than coming up with a down payment for a house. So I have a 23-year-old daughter, and I got to tell you, I keep asking, when do you come off the payroll? I'm tired of paying for everything, so I'm hoping it's near. But
Never.
yeah, I know.
Never.
That's what I'm guessing. I know. So I'll be here when I'm 80 years old, still doing these seminars because my wife and my daughter are way too expensive.
You didn't say son, you said daughter.
Daughter.
It's not.
And that's why. So they want to know how many are in your household, and what does that look like for you. So the more you have in your household, the more you will qualify for. Yeah. And then I'm going to pass it over to Alex here.
Good morning, everybody. How's everybody doing? So a quick question for everybody. Who thinks the home buying process is stressful? Well, it is, right? But how do we mitigate that stress? At Lux Mortgage, what we do is there isn't a cookie cutter solution for you, or you, or you. Everybody has their own, like Tom said, their own why and their own personal kind of concept of what's going on, right? Well, we sit down with everybody, we kind of talk through your situation, and we kind of guide you down the path that is going to be a true value add to you and your family. Because at the end of the day, you're making this humongous investment, and if it's not of value to you, I don't want you to be sitting at the kitchen table a year down the road looking at your paperwork saying, wow, this is a really bad deal. But that happens, right? So what we try to do is try to guide you down the path where it's a true value add. So how do we mitigate the stress? We clear communication. You have all the expectations. You don't ever get sideswiped, right? But there's always programs for each of you. Kind of basing it on that, I love the open platform. So I love to debunk myths. Everybody has an opinion, right? Your dad has told you something. The lawn guy told you something. What are the questions that you guys have in a house buying process that we can all kind of?
And guys, feel open. Like,
Yeah.
honestly, like this is the time to do it. Like, there's not a bad question. I promise you that. And I think if you're comfortable enough to ask questions, it's going to help others understand more. So please feel comfortable to ask. Like, is there anything that? Yes. How much would a loan be? So it would be based off of income and credit and your debt to income ratio. So what we would do, and if you guys want to write this down as like a quick little note, you would take your gross income. I'm gonna make you all mortgage professionals before you leave here. You would take your gross income. So look at either your weekly check, your biweekly, multiply it by 26 weeks, divided by 12. Then what you, I don't want to confuse it too much there. So a lot of eyeballs looking at me like, uh-oh.
You said multiple by 26 and divide by 12.
So if you get paid biweekly, take your check, gross amount, multiply it by 26, because there's 2 months that you're going to get paid extra. And then divide it by 12 months. And that will be your monthly gross income. Once you have that number, multiply that by 30%. That is the maximum mortgage payment that you would like. We can get it approved a little bit higher, could sometimes be as high as 40%, but if you really want to be smart, and right now if you're about to purchase a home for the first time, you have everything in front of you to do things the right way. Keep yourselves within a budget, because look, the last thing you want to do is get up and go to work and pay for a mortgage. I promise you that. So you would multiply it by 30%, and that would help you understand what that budget looks like. So let's say you're making, let's just say you're making $50,000 a year. Divide that by 12 months, so is that about $4,100 a month? So at $4,100, you would multiply that by 30%. Let's just call it a ballpark of $1,200 a month. Make sense?
I'll put it down to the next, how much it is.
Which would put you at about 175 to 200,000, and then depending on your credit, you may put down 3% or even 3.5%, which let's just call it $7,000, without any grants or down payment assistance.
So how do you base the interest rate on this?
Interest rate on the loan is based off of credit score. The better credit score you have, the lower the rate you're going to receive. So, is everybody familiar with different types of loan programs? Okay, so there's FHA, which is a government-insured loan, and that was always known as like your first-time home buyer kind of loan program. FHA requires 3.5% down. You do get the best case pricing with a 640 credit score or better. I will tell you, most of the down payment assistance programs require a 640 credit score. Is that what they required from you?
It's funny because we had two choices between Steve and Orange County at the time, wanted a 640, City of Orange didn't have credit score requirement.
They didn't?
City.
Okay, I think they're, oh, sorry, yeah. So,
Have people watching, I'm sorry.
oh my gosh, okay, I'm sorry. Well, I didn't need the extra nerves. I didn't know how many people were watching.
Oh,
I'm
yeah.
joking.
There's 100,000
You said
people
it.
watching.
So most down payment assistance programs do require a 640 credit score. Our grant program requires a 620 credit score. However, if you have a 640 credit score and we're going FHA, you will get best case interest rate pricing, which as of today, you'd be looking at about 3%. Now, there's a different loan program called conventional, which is backed by Fannie Mae and Freddie Mac. You guys have probably heard about Fannie Mae and Freddie Mac over the years. You know, some of you are a little young, but 10 years ago when the whole mortgage world imploded, they were on the news every single night. Well, they back all the mortgage loans gives you the opportunity to go a little bit higher if you'd like, but the highest credit score for the best pricing is 740. 740. If you have a 680 credit score or better, we can do a 3% down program. Now, those are a couple of programs. I don't know if any of you are veterans, but if you are, that is 100% finance. If any of you are, is anyone here a veteran? No? If anybody at home is watching, if anybody is a veteran, you don't even need a down payment. And it is 100% financing, and our interest rates today are right at about 3% for that. By far the best loan program in the marketplace. So those are a few of the different programs. And that would determine how much money you need down. So it's kind of a loaded question, right? I mean, there's so many different ways to answer it. But I would say, you know, you ballpark it, let's just 3.5% of every 100,000. And you kind of know, but you really want to start out with your income, knowing what that is, to work it backwards for your budget. What are some other questions that, did I answer that okay? What are some other questions that you guys may have with the mortgage process? Yes.
I just want to chime in for a minute. I just felt this one. I can't even get no house or no credit score like that. So let me give you a testimony. Okay, so my very first house that I got was under a FHA loan. At that time, this was in 2002, the house was $89,000. Now, mind you, when I graduated from college, I had tons of credit card debt, and I had a bunch of charge-offs. I didn't manage my money well, bounced checks, because you know how like you're trying to get that little bit of gas money, you're trying to float the checks and things of that nature. I'm just trying to meet you where you are. And it was very daunting because my dad would say, you know, you need to get a house, you need to get a house. But I'm like, I can't get a house because every time I try, I get declined. I get declined. And it was 740, I haven't even seen anything that high in my life. However, albeit and notwithstanding in my dad's voice, that does not mean that you can't work towards it. So it's going to take hard work. It's going to take some discipline. It took me a while, and this is coming from somebody who went through chapter 13. Okay, things didn't look so good, but I didn't have just one house, I had 3. So I went from 1,500 square foot to 3,300 square foot, now getting ready to buy another. But mind you, I'm 44 going on 45. So if you're in your 20s, your 30s, or even if you're older than I am, it does not mean that you cannot get a house. Because I done been through it, had credit dip, checked my credit score, lost 50 points by just checking my credit score. All those weird things happen. You can still get a house. You just have to discipline yourself. So if I can do it, you can do it.
Thank you. And you know, it's a strong point. Honestly, guys, there's not many people I know, and I stand here in front of you, I've lost it all. I had a ton of properties, and I lost it. I was a young kid, not even 30 years old, just rolling. Thought, hey, life is good. Let's keep buying. And then I was humbled. So I learned a lot in my journey where I went from having anything I wanted to not knowing how I'd pay the electric bill, if I'm being honest. You know, so there's not many people that I know who haven't gone through struggles or financial hardship. We've all been through it. Unfortunately, but truthfully, it's the best thing that ever happened to me. I'm so thankful that God blessed me to go through that because guess what? I came out so much better on the other side. Humbled, understanding finances, and the way our whole operation works today is 200 times different than how it was 10 years ago. So I'm thankful I went through it. You know, you're not alone. If anybody's going through some tough times, trust me, you're not alone. The one thing I could tell you is we can help you out. We could coach you through it. You know, but there's nothing, you know, it's not a pride thing. You know what? Life happens. And we all go through different things. So if you've gone through a bankruptcy, guess what? We can help you. You've gone through a chapter 13? Cool, show me your payment plan. We'll do it. So, you know, you don't need a 740 credit score going back to that. We're all, you know, we're able to help you run credit today if you want to see what you do qualify for. And guess what? If your credit's not where it needs to be, I learned a little bit about credit over the years. We can coach you up on that too and tell you exactly what to pay, how to pay it, and give you guidance there. And we don't charge for credit, just whatever we could do to help you. And while I'm talking about that, we don't charge for anything. We don't even charge underwriting fees or processing fees or origination fees. It doesn't cost you one penny to work with Lux Mortgage.
Does everybody understand what that means, the processing and underwriting fees, for the most part?
What we do, and when we reestablished ourselves, now that we kind of opened that door a little bit, I'll tell you a little bit about it. We used to make a ton of money charging fees and whatnot. And when I went through what I went through, you know what? Honestly, I learned a lot about myself and what's important. And what's important is doing the right thing for the consumer, you. And for me, to charge an extra $1,500 in junk fees for underwriting and processing, I don't feel comfortable with it. We get paid directly from our investors. And that's more than enough than what we need. And it's a fair amount, but that $1,500 could be a bedroom set for you. Could be a living room set for your new home. And that's, for us, more important than us charging junk fees, because since we changed our whole model, God has blessed us and opened up so many more doors that our business has doubled every year for the last 3 years. So we're all about helping you and getting you to where you want to be with your family and your dreams. And that's for us, I mean, that's the most important part. Any other, sorry, I didn't mean to go off there. But I figured, well, what?
I have a question.
Yes.
What about when people say I can fix your credit in like 25 days online, and I see all these I can fix your credit? What should I do about that? Is that real or is that?
So you guys all have to be, so the question is, online companies saying they could fix your credit in 30 days or less. I mean, I don't really think it works like that. I don't know what magic they can work on the back end, but I can just tell you there's formulas, there's algorithms. If any of you have credit card debt, understand what your limits are, and you don't want your balances to be more than 30%. So if you have a $1,000 credit limit, try to keep your balance less than $300. So now you're all going to say, well, wait a minute, I can't use my credit card. I'm not saying that. Understand what day, let's say whichever bank, ABC Bank, okay? You bank with ABC Banking. Find out what day do they actually report to the credit bureaus. So if they report to the credit bureaus on the 10th of the month, just know, go into your online account and pay it by the 8th and get it underneath $300. You should not be using credit cards to survive. So what happens is once you go over 50% of your limit, so if your limit's $1,000 and you owe $700, your credit score is going down every month, even if you're making your minimum payment. The reason for that is it looks as if you can't handle your credit. So now your risk level goes up. So a lot of people always, I hear it every day. Well, I make my minimum payments. My credit should be up. Well, every credit card's maxed out. So if I look at your credit and I was to lend you money personally, I would be terrified, because you're only one bad month away from it all imploding. So those are some goals. If anybody really wants to get their credit up, that's a quick trick to say, hey, we could do it in less than 30 days, but it's going to be nothing I'm doing, it's what you're doing. You have to pay down credit card debt. Does that make sense to everybody? Does anybody have any questions on that? Yes.
I've seen that my credit went down because thank you. My credit went down because I have hard inquiries with the student loans. I have twins, and I have to get the Direct Plus loan. So every time that they applied for the Direct Plus loan, I had a hard inquiry in which drops 20, 30 points on your credit score.
Yep.
Well, at least mine.
Well, and it is because of the amount of times they're running it.
Mm-hmm. And see, at Georgia State, they kept doing it like at least 8 times.
Wow.
I've had 8 hard inquiries within the past 6 months.
Wow. And we see that a lot. So I had a gentleman call me last night, and he was very worried about his credit, and he had decent credit. But I had the conversation with him. He had 28 credit inquiries over the last 4 months. Well, in his case, it wasn't student loans, but he applied for a car loan. And I can tell you guys, you may not realize it, but when you go to a car dealership, it's not like when you come to Lux Mortgage and you say, hey, do I qualify? And I look at it and I'm like, all right, cool. We run it one time for 120 days, your credit is good. We don't need to run it for another 4 months. However, when you go to a car dealership, they're like, okay, hold on, I think this one can do it, this one can do it, this one can do it. And they're sending out your application to 10 different banks. Well, guess what? Your credit's being run 10 times. So when we see a credit report, like, my heart breaks, because you don't know that as you're sitting there. You're like, okay, cool, yeah, they're working on it in the back. Well, yeah, they are, but they're sending it all over the country, and your credit just got hit 10 times, and now you walk out and your credit score went from 700 to 640. Because now your credit bureau is going, whoa, what are we doing? So it happens with these hard inquiries. You know, I have people that ask me all the time, okay, well, if I apply for a mortgage, is it going to be a hard inquiry? It is. I can't sugarcoat it. I would love to use a lot of you, including myself. I use Privacy Guard to monitor my credit. You may use one from your local bank, a Credit Karma. They're all great. However, they're all based off of credit card algorithms. So more often than not, I'll have somebody say, hey, well, you know what? Don't run my credit. I have a 650 credit score from Credit Karma. The challenge is it's not for a mortgage credit score. So you could run your credit on the same day for a mortgage, a car loan, and a credit card with the same credit bureau, and you'll have 3 different credit scores. So the inquiries are an issue. We do pull a hard inquiry, but we only run it one time unless something happens and we're 4 months out. We would have to renew it, or update it. But yeah, it's something you guys want to monitor with your credit card balances, inquiries. If you're going to a car dealership, please be aware, because you could walk in really good credit rating and walk out 40 points less. Not to beat up on the car dealerships. Any other questions? Yes.
Something that needs to be done.
And Daniella touched on it earlier, and I'm glad you brought it up, because I meant to go into that. So when you're purchasing a home, we are going to pull credit, okay? We're not going to do another hard inquiry. However, prior to closing, the underwriter is going to do a soft pull. So it's not for credit score, but they do want to see, did you buy a different house? Did you buy a car? Did you take out a loan at Home Depot getting ready to do some renovations at the house? Did you go to Rooms to Go? Yeah, I mean, you guys touched on it all, and it was great, because the truth of it is you don't know. So you're like, hey, cool, we got our approval, we're ready to go, let's do this. And then you're like, well, what do you mean now I don't qualify because I have a car payment, or I co-signing? Please don't co-sign for anybody while you're in the mortgage process. I just had a situation last week where nice lady co-signed for her son. He needed help. She didn't realize it. Well, when you co-sign for somebody, or you already have, we can back out that payment after we can prove 12 months canceled checks or payments from the other borrower. Okay? So let's say you co-sign for Danielle, and now Belinda goes, okay, I'm gonna go ahead and apply for a mortgage. Well, if we could prove that Danielle made 12 payments from her account, not a joint account, then we could back that out of your debt to income ratio. But if it hasn't been 12 payments, or you've made the payments and she's just giving you cash, we can't back it out. And those are challenges that you run into, because, it is what it is, right? We're all here to help family, and you're like, well, I want to help, but then you don't think like, hey, 2 months down the road you might be buying a house, or you might be in the process and you think you've already gone through it, so you don't have to worry about your credit, but they are going to do a soft pull at the end just to verify you haven't done anything like that. So yes, so please make sure the mortgage closes, or let's say you have plenty of debt to income ratio. Have the conversation with me before you open up any debt to say, hey, Tom, you know what? I want to get started with this. I have a contractor who's coming in. Home Depot's got a great deal, or let's say Home Depot's got a great deal on appliances. It's Labor Day weekend. Can I do it? Cool, what's the monthly payment? And then I'll tell you, yep, we're good. Just send me over a credit card statement. We'll get this over to the underwriter. So always, always, always communicate. Hopefully it's with us. But great question. Any other questions regarding thoughts? I mean, and Alex hit it on the head, because whenever you guys start this process, everybody's a real estate expert. I mean, I have, and look, my daughter just bought a house. Granted, I helped her with it. I helped her with her mortgage, so it wasn't as much as that. But if somebody else was doing it, I probably would have been involved, like any other dad. And I love it and appreciate it. However, this is what they do for a living. This is what we do for a living. There's no benefit for any of us not to put you in the best position. So I'll always have somebody, you know, their dad's involved, and hey, you got to do this, and you got to do that. Cool, how many homes has your dad bought and sold? And you know, I love the dad. The dad's sitting there, I've done 4 in my life. Cool, I closed 4 yesterday, so what are we talking about? Right? So I make a joke of it, but it happens a lot. And the reality is you just have to know and trust us. And if you want to keep your own sanity, probably don't tell everybody while you're in the process, because everybody's going to tell you what you should be doing. And Belinda, your credit's not the same as Danielle's. Your income may not be the same. Your assets may not be the same. Nobody has the same situation. So when somebody's going to sit here and go, what do you mean you don't have a 3% interest rate? Well, they don't know what your credit score is. They don't know what your income is. It's just going to cause you a lot of conversation that's going to go nowhere. It will cause us the stress. Just kidding. So, but those are some of the things, like how to make your life a little bit easier through the process. Any other questions regarding credit or things you may have heard through the mortgage world?
How about employment?
Well, I bought a house.
Okay.
And with it, I didn't have a lot of, I didn't do any down payments or anything like that. I guess because my profession was nursing, and I only worked for like 3 or 4 months in nursing, but the underwriter that I spoke with was like, oh, well, we know how your income's gonna be because you are in nursing and how the field is. And so the down payment I had was only like $500, but like you all said, for is the escrow, the person that was selling the house only required me to have $150. But also my insurance went through with the, I'm trying to remember this correctly. My mortgage, my insurance, and something else was all together and my taxes for my real estate for the house or whatever, taxes for the house. All that was combined together, which was really easy, you know, like, oh, okay. But I was a first-time home buyer at that time when I bought my house. So I was like, oh, okay, I understood, but I didn't have that much money, but I just believe I was blessed at that time for, you know, without having, but I did the $400 for the inspection, and the appraisal cost me about $350. That was right.
Okay. So piggybacking on the nursing, did you go to school for nursing?
Yes.
Perfect. So the banks, what they typically look for is 2 years worth of work history, right? So you went to school.
Right.
So the time that you were in school, you started your job, you put together that 2-year work history. So let's say you're a mechanic at Toyota and you've been there a year. The myth is, well, I've only been at my job a year. I can't do this. Well, let's say you went from Toyota, now you're a mechanic at Honda. Well, you're still working in the same industry. So consistency. What banks look at is consistency. How long have you been in your industry? Did you go from Florida Hospital to RMC? How long were you in school for? We can definitely use your transcripts to put together that 2-year worth of work history. So does anybody have questions on that aspect?
Switch careers. Now I'm self-employed.
Okay.
Would I be able to?
Just for that.
So would I be able to use my past work history? It's a different industry.
So I'll jump in if I can. So that's a huge challenge. What were you doing in your previous job? You might be asking.
I worked at Publix.
Oh, okay. And what do you do now for your business?
I'm a mechanic.
Mechanic. So that would be 2 different lines of work, but more often than not, you are going to need 2-year history of being self-employed. So the reason for it is while you are at Publix, you're getting W-2s, they're withholding your taxes, they understand your hourly rate, and as long as Publix states, hey, you know what, he's a great employee, we're going to continue because we do verify your employment, that's fine. The problem is now as you go to be self-employed, we don't know what your income is. So your first year, you might say, hey, you know what, I made 50 grand. Awesome. But what were your costs? What did it cost for the parts? What did it cost for the garage? What did it, you know what I mean? Just, you know, marketing, whatever that may be. So after all of those costs, you're going to have an adjusted gross income. So what we could do is we can use your adjusted gross income as your income. The challenge with this, and I'm really glad you brought it up, the challenge with this is you have a lot of self-employed buyers like yourself, maybe your garage did $100,000. It's not a cash flow problem. But on paper, we don't know until you file 2 years tax returns. And then from there, we can gauge, okay, what is your average income? That the bank can feel comfortable to say, okay, cool, we can lend you 200 grand because now we know how you'll pay us back. But without that, or if you're writing off 90% of your, the gross sales, the problem is you're now only going to get credit for $5,000 of income. Well, how are you going to pay, let's say, $1,000 mortgage if you're only making $600 a month? And that's how a bank looks at it. And it's very confusing because everybody goes, well, what do you mean? I'm making so much money. I get it. I'm self-employed. I get it. And this is not directed towards you, but just in a general statement, I used to do that with my taxes. I used to write off everything. You know what? One thing I learned is you have to pay your taxes, right? In the Bible, it says pay your taxes. And it's so true. And I do it. And I pay a ton of money to the IRS, but I'm happy to do it. And if I need to get a mortgage, now I could show my tax returns and show my true income. So that is a challenge. So we would need 2 years tax returns.
Okay.
But make sure to let your CPA know that you're in the process of looking to purchase a house, so that when they do their taxes,
They'll know what to.
Well, and I think it's more, and not to say it's not having that conversation. I think in general you want to pay your taxes, right? And you're going to find, and I picked on the car dealers earlier, and I don't have a problem with car dealerships, and I don't have a problem with CPAs, but it's their job, right, to save you money. Hey, you're all sitting here going, how much am I getting back next month? What's up? You got a good CPA? Because my CPA didn't get me back, enough money, in my opinion, right? It's a happy medium. If you don't pay tax, and you're probably looking to pay taxes, and I don't want to point it out like that. But in general, if anybody else watching or anybody else in here is self-employed, you want to pay your taxes. You may need a business loan in the future. You may need, to buy a building for your garage. You can't do all that unless you're showing your business makes money. Does that make sense?
Yep.
But after 2 years, we can get your money. Yeah.
any other questions?
Can you just do a quick run through of what they will need document-wise moving into getting a loan?
Yeah. And actually, can I touch on one more thing before we go into that? So, assets. I want to touch on assets really quick. So we've gone over credit, we've gone over employment, income. We could dive a little bit more into. I know it kind of goes hand in hand with the employment, but assets is a big deal. So you may say, okay, I want to buy this house. Well, you're allowed to get a gift. So you could get a gift from a family member. And the thing about that is, you don't have to worry about transferring money into your bank accounts. There are so many people that make it more challenging throughout this mortgage process, because if I'm going to buy a house and Alex says, hey, Tom, I'm going to gift you money, the worst thing to do is have him start wiring or depositing cash in my account. What we would want to do is say, okay, hold the money where it is. We'll provide you gift letter documentation, because you guys are allowed to get a gift from a family member, a parent, a grandparent, who's going to say, you know what, guys, you're going to buy your first home? I'll gift you $3,000, which is awesome, right? I never had that fortune, but maybe others do. We want to be able to document, and everything with assets is paper trail. So we want to know, where is it at? Don't move the money. Don't withdraw money. Don't deposit money. Cash it, all of it, because you always have to think, if you're going to get into this process, paper trail, paper trail, paper trail. Otherwise, what does the bank think? The bank thinks you took a loan from somebody. What is that monthly payment going to be? We can't verify where monies are coming from. It just brings up way too much doubt. And when you're in this process, you don't want to give an investor any doubt. Yes?
So it's best to get the gift in cash?
No cash. So what we want to do, so the question was, is it best to get the gift in cash? What we would like to do is, let's say a family member is going to gift you $2,000, right? Just say, hey, family member, keep it in your account. My mortgage lender is going to email you or call you. We would ask you for their full name, email, and phone number. We will email them a gift letter. And then what we would do is ask for a bank statement if we're going FHA, if you're gonna wire the money on Tuesday, we would need a bank statement for just dated Monday through Tuesday showing you had the money in your account. That's it. So that's always the biggest question when it comes to a government loan is, hey, we do need a bank statement, and family members may freak out and go, I don't want you to know how much money I have or I don't have. So it's a conversation you always kind of want to have. But paper trail is huge with assets. If it's going to be a cash situation, then call us, and then we can come up with a way to figure that out. Does that make sense? So, yeah.
Is that the same when it comes to, like disability, SSI, SSA, when it?
Disability,
like-
SSI, we would just need an awards letter, and then just 2 months bank statements showing the direct deposit into your account.
Things like that?
Yep. Yeah, child support, we would just need a child support agreement or a divorce decree which spells out the actual amount. And then, yeah, and then just 2 months bank statements. It's all, I mean, if you're getting direct deposit, especially if you're doing like child support through the county, it's very easy to detail. The hard part is when the county's not or the city's not involved, that there's cash transactions and we're missing payments, because then it's really hard to show that it's consistent. Yeah, which we run into every now and then, not too often with the county, but yeah, anything going in and out of your bank account, the underwriter will ask if it's cash, and they're going to say, hey, where is this going? You know, and we have to be able to answer those questions. Otherwise, we can't use those funds. So let's say you have $5,000 in your bank account, and there was a $1,000 deposit, and we can't prove where it came from. They'll only give you credit for having $4,000.
So before we get into the documentation, we've touched on credit score, we've touched on employment, liabilities, which is assets. Any questions that have arisen as we're all talking about this?
That's not a question, but I do have a statement. When I went into purchasing my house, I was separated at the time, but this is in Ohio. I had to find my husband to have him sign the mortgage with me, and that was just a headache when I'm at the table trying to get my keys for my house. So how can people really avoid that?
So I'm going to start out by saying, Belinda, maybe you should just stand up here because you're really good at giving me like things to touch on. I mean, I feel terrible. You've gone through some stuff here. It's a great point, and thank you for bringing it up. Yes, that's true. The state of Florida is a homestead state. If you are legally married and you are purchasing a primary residence, your spouse is required to either A, sign on the title, or if you're separated, you're not going to want spouse signing on the title, and I don't blame you. We would have to ask the spouse to acknowledge the mortgage note, which means they sign the mortgage, they are not liable for the mortgage, they are not on title, therefore they have no ownership to the property. However, for liability purposes, that spouse must acknowledge that they understand that you are buying a homestead property in the state of Florida, or in your case it was Ohio. That is true.
If you're married?
So if you're legally married, let's just hypothetical.
I am.
Okay.
That's why I'm asking.
Okay. So you're married and you go off to buy a home and you don't want your spouse on the mortgage or to worry about any of it. You don't want to be at risk of losing half of your asset. Unfortunately, in the state of Florida, we still have to ask your spouse to acknowledge the mortgage, stating that he understands that, or she understands that, you know, in whoever's case, understands that that you are purchasing a property, and therefore they have to know.
But they have no ownership.
They have zero ownership, but it's a conversation you have to have. Sorry?
They can sign something saying that they're not part of it.
It would be at closing, and we could send somebody to them, or if they're not local, or they could come into the title office or attorney's office to sign, but they're only acknowledging that you are getting a mortgage because we are in a homestead state. So they have to, for liability purposes, they have to acknowledge that they know that you are doing this. It's not a big deal. It's just a conversation that could be a little challenging at times.
Yes, ma'am.
Also, with child support,
increased my child support that I was receiving for this one here, because it wasn't consistent for 6 months. Like, it had to be like consecutive. I can't miss a payment. If it miss a payment, it just like starts over. Had to be consistent for 6 months.
And it's true. I don't know the exact guidelines, so I would have to go back and read how many exact months in a row. And that's what we just discussed. It has to be consistent, because we don't want to put you, think about it this way. If we're saying that you can go ahead and buy this $200,000 home and afford a $1,200 a month mortgage payment, but we're basing it on you receiving, let's just say $300 a month, but you don't receive that, we're going to put you into a financial hardship. So it's a protection for you, but it is right. Yeah, at the end of the day, the investor doesn't want to see any of you fall behind. We don't want to see anybody fall behind. You know, the idea is that you're using this as an asset, truthfully, to build on. You know, so when we start using, let's say it's alimony or child support or, you know, co-signing, it's very risky, because we don't, you know, if that, let's say Danielle doesn't pay the car, Belinda, you're required to pay. We have to make sure that we've done our due diligence to make sure that we're protecting you from yourself, really.
So if you're in a sales position, and I've been in sales for quite some time, how do you actually,
Great question. How many years have you been doing sales? What do you sell?
Right now I work for Staples, but it's a business department, so, corporate, yeah.
Very cool.
So, business to business.
So are you a W-2 employee with bonuses and commission?
Well, no commission, we do receive bonuses.
Okay, so I'm glad you asked the question. So anybody who is in a sales job, we would have to show, if we're going with, let's say, a government loan, an FHA loan, we have to show 2 years history of the bonus, or I'll even touch on if anybody receives overtime. We need a 2-year history of overtime before we can use it, which is a big deal for a lot of people. Let's say you're a truck driver and you're constantly working 60 hours a week. We can only give you credit for 40 hours a week unless there's a consistency to show that you've been receiving overtime for 2 years or bonuses. Because if you've only received it for 1 year, but it was just, hey, you guys took on some really large accounts, and now next year it's not going to be that way, it goes back to the risk. We don't want to put you in a financial hardship.
So let's piggyback on the W-2s, right? So going off of Caroline's request of what would the documentation be. So in a day in a life, you guys come, we sit down together, we run your credit, we do the application together, super simple. It's an over the phone conversation or face to face, whatever's easier for you all. And then we're going to go ahead and request the last 2 months bank statements, last 2 years W-2s, copy of your ID, and last 30 days pay stubs. If you're self-employed, last 2 years personal and business tax returns. Then in a nutshell, we're proactive on, we gather all that on the front end, right? So that once we give your realtor that go-ahead, Belinda's ready to go, she can buy 225. You can take that to the bank. As long as we don't change anything, right? Don't quit your job. Don't add debt. So, any questions on that? Yes, ma'am. Yeah. So, 2 years W-2s, so it'd be 18 and 19. A lot of people's W-2s aren't out at the moment, so we can use the last paycheck of 2019 in lieu of your W-2. Last 30 days pay stubs. So if you get paid weekly, it'd be 4. If you get paid bi-weekly, 2. If you get paid monthly, 1. 2 months bank statements and copy of your ID.
And what we do, so once we start the conversation, we actually will send you out a link for our secured portal, requesting these documents. You can see everything right there on what we're looking for. And the cool part about it is, like, Danielle is included. Danielle will never see your documents, but she'll know, hey, we requested 5 different items from you. You could upload it right to our portal. Once you upload it, we will review it. We will clear it. If we have any questions, we'll put it right back in there. You get it by text message and email immediately. It takes out the, hey, I thought you needed this, I thought you needed that, because we're all busy, right? You guys are busy. You're running around. You don't have time to be dealing with extra, nonsense. So we want to simplify it. So now we're all in the know. You don't have to call everybody. We don't have to call you. You know, it's just making the whole process a little bit easier. And really, why do we do this? We want all of these documents right up front before you ever go to look at a house. And the reason for that is, and I'm going to give you one quick analogy, and then I'll get to your question. It's almost like going to Publix. Publix, right? You don't go to Publix and go shopping unless you know your budget. I don't know about you. I know I have the money in my account, but I still check it. I'm like, okay, cool. I want to know where am I at, what's going on. We all do it. It's no different than when you're looking for a house. Daniella said it. What, you're going to go find a $300,000 home, and you only qualify for $225,000? You're going to be heartbroken. So we have to know, what do we qualify for? What is our budget? And be prepared. Because there's no reason to start having Daniella drive you around town without knowing what we're doing. Yes, go ahead.
As far as employment, you need to be employed at the same place for 2 years?
No. So if you're working, let's say, at a doctor's office as a front desk manager, whatever it may be, right? If we can show that you have a 2-year work history in the same sort of line of work, whether it's customer service at that point, front desk management, whatever that may look like, we just need to show that you're working 2 years. Now, let's say you didn't work. Let's say you went out of work for 6 months. Well, then we would need to show that you've been back to work for a minimum of 6 months to make up for that gap of employment.
Things happen, right? People get sick, people move, things happen.
You've been out of work for 6 months.
So let's say you went out of work for 6 months. We would need to show that you've been back at work for a minimum of 6 months before we could provide you a loan.
Within a 2-year span?
Yes. Yep. And it just goes back to just having the consistent income and showing that you're working. And let me touch on one other thing without it getting too confusing, but I know a lot of us do it. And I know as I was, getting started, I still work a ton of hours, but I always work 2 jobs, all right? How many of you in here work 2 jobs? Right? But it's real, and we all know somebody who does. So if you're working 2 jobs, we can only use both incomes if we have a consistency of 2 years of doing so. So if we can show that you've worked 2 jobs for the last 2 years, and if it wasn't the same jobs but yet different jobs, that's okay. We just have to show that you've been working 2 jobs for 2 years to use both incomes. And the reason for it is, let's say you want to qualify for a house, and Danielle's like, you know what? I'm going to go to Publix. I'm going to get this extra job. It's going to show extra money for me, and then quit your job after you buy the house. They don't want that. They want to know, hey, this is something that's been going on long before you were buying a home. And I know none of you in here are doing it, but maybe somebody at home is working 2 jobs, and maybe they're working right now watching us. So I'll pass the mic back over to Alex.
I'll go back to, is there any questions?
Well, we were at doc request.
Yeah, we were at doc request. Are there any questions on the doc requests side?
Okay, so now we all know we're going to get this right up front. We're going to know what we qualify for. We're going to go through credit. We're going to go through income. We're going to go through assets. There's no questions. So the day that you go out to start looking at property, all we have to do is find a house. So at that point, the ball is no longer with us. It's with Daniella. So Daniella is then going to find you guys a house in Caroline, and you guys are off and running. Once you write an offer and you get a contract accepted, and we receive that executed contract, it comes back to us. You guys will work on your home inspections and all that good stuff, and she'll coach you through the whole process of putting down an escrow deposit. Now, I wanted to touch on the escrow deposit because I know you brought it up earlier. So whether you put down $1,000, $2,000, whatever that looks like, that money then gets credited towards your down payment. So you don't lose that money. Yeah.
Okay, whatever the escrow deposit is, and like I was asking, there's a certain amount that you have to put down.
Usually I see it's about 1%.
About 1%,
Mm-hmm.
and what that goes toward the initial deposit.
Correct.
Okay, the initial deposit is going to be what I have to pay.
It is.
Okay, so the closing cost is what you get help with.
you can get help with.
Okay, okay.
So I don't want it to make too confusing. Now, are you talking about like a down payment program, or are you talking about from a seller?
So the down payment and the closing costs is gonna be two different things, right?
Correct.
Okay, so the down payment is what I have to take care of myself.
Correct.
Okay, without you don't get you don't get help with that.
You could if we choose to use one of the programs.
Oh, okay, because I thought that's why I was asking.
So you would need, so there's multiple different programs. You might need $1,000 to $1,700, or if you take advantage of a grant program that we have, then you'd be looking at 1.5%.
Okay, but then that's one thing. Then the closing costs.
Correct. Now, with the down payment assistance programs, we may be able to, just depends on what it is that you qualify for, that would allow you to receive help with closing costs. Okay. But normally what we would do is Caroline and Daniella could always go to a seller and say, look, we're going to offer $200,000. I don't want to play realtor here, so I apologize. We're going to offer $200,000, and we would like to ask up to 3% of the sales price for the seller to pay in concessions towards our closing costs and prepaids. Now, what does a $200,000 mortgage look like for closing costs? You're probably looking at about $5,000 to $5,500 worst case scenario. $5,500 tops. So if they're willing to pay up to 3%, great. That's $6,000. The next question is going to be, can you apply the difference towards your down payment? You cannot. You are required to put down that X amount to meet guideline minimums. So if there's extra money on the table, normally what we would do is use that extra money to buy down your interest rate to make your lower, to provide you a lower monthly payment.
Oh, okay.
So you guys can't leave closing with any money because you are required to put down your minimum down payment. And if you don't, then you will not qualify for that program.
But I want to jump in real quick and just touch that because the escrow deposit still needs to be put down no matter what. So you still will need to have that up front.
It could be anything. I don't want to overstep my
There are
boundaries.
some sellers who will have a requirement for an escrow deposit, so it has to be that particular amount. Could be 10%, could be 3%, could be 1%, could be a certain dollar number. But if there is no requirement from the seller on it, then you can go ahead and say, well, then I will give X amount and see how it flies. But that does still need to be put up front, and like he said, it will be credited at the end, but you still need to have and be prepared to put that money up front.
Yeah, and I don't want to overstep my boundaries, honestly, guys. I'm good at mortgages. I'm not a realtor. I don't write contracts. Like, I'm not, in the negotiations there. I'm there to always support, Daniella or Caroline any way we can. But they would be able to tell you best on what you need to put down in escrow. So I don't want to make it confusing, so forgive me for even saying the 1%. I shouldn't have said that. So whatever that amount is, they will tell you.
Okay, I have two questions.
Yes.
The first question is, so you have to put down a down payment and a closing cost?
It depends, yes. So the answer is yes.
Okay.
However, if you're using a down payment assistance program, you may be able to receive help with your closing costs. If we're not using a down payment assistance program, then we would want to ask the seller for assistance in paying your closing costs, which is very normal. It's not out of the norm. Yeah.
And so they'll do that?
If they want to sell a house, they'll do it.
Oh, true.
What's the worst they're going to say? No?
True. Okay,
And just so you know, like, let me add one more thing. Let's say a seller was to come back and say, look, cool, you offer 200. Let's push the purchase price to 205, and we'll pay 5,000 towards your closing costs. A lot of people freak out. You know what that's costing you a month extra? $20. Cut down on Starbucks once a week. That's it. So it's like when you do the math, you go, wait a minute, $5,000, $20. I could swing 20, $25.
Right.
You can do that. So when I break it down like that, it makes a little bit more sense, right?
Yeah. Those big numbers is kind of scary. The second question is, who do you pay, like, if I were to give $1,000 for the escrow deposit, who am I giving that to?
Okay, so I'll jump in on that one. That's actually going to be going to the title company. The title company plays like a third party to assist everyone so that no one in particular, buyer or seller, is holding the funds. It's like, no, we got you. We're going to hold this here. And when we figure out who owns this property, we'll either give you the keys or give you back the money.
Right. And just so you guys know, I mean, when you get your contract, Daniella and Caroline, they'll walk you through your contract. and there are things that need to be met within that contract. So your money is being put up really just to say to the seller, hey, we have good faith, we want to buy your home. However, still has to pass inspection. We still have to have an appraisal done. There will be an appraisal contingency. Let's say you go into a contract for $200,000 and it appraises at $195,000. Okay, well, we go back to the seller and say, look, can you provide us the comparables that you used to come up with a $200,000 valuation? If they can, great, we'll go back to the appraiser. If not, then the next question for Daniella or Caroline to you would be, well, either A, they drop the price to the $195,000, or they're going to ask you to come up with the delta, or if we can't meet in the middle, then that would be another out on the contract. So you're really not at a huge risk when you put your money down, and that's kind of my point here. A lot of people get nervous and go, well, if I'm going to put up $1,000, what happens? You know what? Once you have an inspection done, who knows, right? That's for all of you guys to figure out. But there's so many different outs. Obviously, you want to close on the house and buy it. But the point here is, don't be too overly concerned that your money's at risk. Yes.
That happened to me. Our house I was doing purchasing. It was listed for
$225, and we went under contract for $225, but it appraised at $215.
Yep.
And the seller was giving 3% closing costs. So when it underappraised, they said, well, we're not giving you closing costs. And I was like, well, I'm ready to walk away. I want some closing costs. So they end up giving us 1.5% instead of the full 3%, because it wasn't our fault that your agent overlisted the home.
Very true.
But we were prepared to purchase it either way. We just ready to walk away because we didn't want
Sure.
to have to pay.
It's a lot of money.
Yeah, it's a lot of money.
So it happens. And one of the flexibilities that we have as being a brokerage, again, I'm not locked into all the contracts that we can't reduce interest rates, we can't give lender credits. Many of our realtor partners, they all know, I don't care if we make money on a deal. I honestly don't care. Obviously, it's our goal. We want to. But what I do care about is making sure that you and your family that have just gone into contract are going to be able to close and move on. There's so much excitement there. And if you don't, it's just such a negative vibe for everybody. So I'll give you an example. We had a deal that we just closed down in, I want to say Winter Haven, down in that area. And it was for $224,000, paying $5,000 closing costs for the buyer. And she did not have the money. She was a single mom. And the appraisal came in at $220,000. They're like, nope, we're not doing it. So the bank pays us 2.75% for every loan we close, full disclosure. Okay, that's what we make. And it's a very fair compensation. But then I have the ability to give that money back. So what we did, I think I made $800 on that loan, which I didn't care, but we paid all of her closing costs to make sure that her and her children were able to move in. So for us, when I tell you it's truly about helping, so if there's a situation like that that does come about, whatever we can do to help you, we certainly will, and we mean that, and we stand behind that, because at the end of the day, how upsetting would that have been if you couldn't come to those terms? You guys already probably started picking out paint colors, and I'm going to do this, and we're going to do that, and you could already envision your children running through the backyard. Like, it's pretty sad if money gets in the way and we can't do it. So whatever we can do, if we can do it, we will.
So I have two questions as well. When it comes to the escrow amount, how soon in the process, after you've seen the house, and maybe that's something that you like, how soon do you know of that amount that you have to come up with?
I'll jump in on that one. So basically, when you're writing your contract is when you'll see it on the initial offer. So you will negotiate that with your agent. You'll know in advance, well before you put that offer in, what you're going to go ahead and accept. And then within 3 days of the seller actually accepting that contract is when you would have to put that in.
And then when it comes to an existing home and getting one built, what is the difference in values? Like, is it you should go for an existing when you're a first-time home buyer, or should you try to have one built?
I mean, I feel like that's almost kind of a personal choice on that one, because a lot of people don't necessarily have the time to wait for a build out. That can be 6 months down the line. You never know. So if you're in an immediate need to move, then I would suggest going with something that's already made. But if you have the time and you want to put a little more personal taste to it, I would go, to the builders.
Yeah, it definitely goes back to your why. You know, what are you trying to achieve? What does your 30, 60, 90, 120 day footprint look like? You know, if you're at that point in life where finances, everything's on par with everything, and you see this house and you say, I want to design this one to have this bathroom this way, then that's obviously an option for you. But it definitely is, like Caroline said, a personal preference.
And we also provide loans for new construction. So if you found a piece of land and you're like, hey, you know what? That's what I want, and I want to build my house, we can do that too.
Hmm?
But again, you know, it goes back, and Alex just said, like, everybody's situation is different. You know, so to ask me, you know, why do people love new construction? I think it's probably because of the warranty.
Mm-hmm.
But if you're buying a resale, you guys could always buy a home warranty.
Or ask the seller to buy the home warranty.
Boom.
This is all
That's
things
good.
that we do in that negotiation phase when we're getting you ready as an agent. You know, that's why it's good to have a buyer's agent on your side. We're here to make sure that we're going to get you everything we can get you for that home if we can, whether it be the seller credit, the seller buying you a home warranty, the seller reducing their price, whatever it is. We're going to do what we can to make sure we protect you and back you up.
Any other questions regarding the mortgage process?
Your agent, yeah, whoever is your agent is going to be the one helping you with that. So, you know, if Daniella, myself, whoever, you know, you have the right to choose whatever agent you want, whoever you feel comfortable working with, whoever you feel is giving you the most knowledge, who's backing you up, who's, you know, answering your questions in a timely manner so that you don't feel confused. If your agent isn't willing to sit on the phone with you for a few hours and go line by line through that contract.
Yeah, the biggest thing here, I will say, you guys are the boss, right? You want to be comfortable with the realtor that you're working with, which Danielle is phenomenal, right? And so is Caroline. You want to be comfortable with us. It's all about a trust factor. It makes the process that much easier if you trust the people that you're working with. You know, they're going to understand your needs. And they're not going to show you something that doesn't meet your needs, right? They're going to show you the possibilities of this is what we have. This checks off 8 of the 10 things that you want, but in a future reference, we can do X, Y, and Z, right? We're going to listen to your needs, and we're going to guide you down the path that is a true value add to you and your family. But at this whole entire process, you guys are the boss. You need to feel comfortable. So don't ever feel like, I have to do this. No. Vocalize it. Alex, you're going too fast. Okay. Where did I lose you? Let's kind of regroup. Make sure that you understand everything moving forward.
You know, I would tell you guys, the more questions you ask, the better. Truthfully. Whether it's today or 2 months from now. Throughout the process. Because for us, I mean, look, I don't know about you guys. I played sports my whole life. I learned a lot from my coaches. We're here to coach you, and we're going to do it. And, you know, our goal is to make sure that you guys all get into the home that you see you and your family being in and fulfilling that dream, and we just want to be a part of that story. I know Caroline may have more to say, but I'll end it on our end of it unless you guys have more questions for us. I have my computer here today. If anybody's willing to test the waters, we can run credit. We could come up with game plans. We could coach you up and let you know, hey, this is where we need to be. I'll spend as much time here as needed. You know, so feel free if you guys want to come up to us afterwards and get the process started. You know, let's do it. And thank you guys so much for coming out. And I'll let Caroline take it from here, but we really appreciate the time and are so blessed and thankful to be able to spend this time with you guys. So thank you.
Thank you.
All right, folks, and we promised that we would get you out here in time for lunch so that you can enjoy a little bit of lunchtime and some good old Saturday fun. It's not Sunday fun day, so you can't. Saturday fun. But if you do have any other questions, you have our information in the flyer. You're more than welcome to give us a call. You know, the process is daunting when you look at it, and there's a lot of information that was given today, a lot of information. Just take it a step at a time. You know, like you said, trust your people, trust your team, and if something's not working for you, make that change. You know, you're not going to bring your car to a mechanic and then all of a sudden you're like, oil's leaking on the floor, and you're just like, you gonna fix that? I'll figure it out. No, you need to know how to do this. So if they don't know what they're doing, they're not doing it the way you want it, make a change. There's nothing wrong with that. Anybody have any questions about anything else process-wise, loan-wise, funding?
Again, my contact information is in the folder, so feel free to share it, text me, email, Facebook me, whichever you choose. And also, there's plenty of refreshments back there, so feel free to grab some, take some home with you guys, take some for the kids. It's available. And thank you so much for coming out, guys. Thank you.
No, I was gonna say, I wish I would have went through something like this when I was purchasing my home, because a lot of things I just didn't know, and I was going off of my dad. you know, so this was really good. And if you do it more often or however, you really get, so people will know how to, and won't be scared and just,
Follow Daniella on Facebook. She'll keep you posted of when the events are.
Yes, definitely.
I am on Facebook.
Yes, definitely. Thank you guys for coming.
Thank you.
And once again, I want to thank Pastor Martin for giving us the opportunity to be here and share this information with not only his members, but as well as the nearby community. So thank you so much, Pastor Thompson Martin, for that.